Hello and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin and I am here with my father, Carl Swenlin, and we're here to get you ready for the week and particularly give you an idea of what's going on today and what we expect moving forward. First of all, we are not registered investment advisors, so all trading decisions are your own. Anything that you hear in this trading room or in our blogs, particularly buy points, sell points, buy signals, sell signals, those are mechanical signals and they should not be considered a call to action. And basically anything that we say here when we're talking about various stocks shouldn't be considered a call to action. All right, I think that covers it. Let's go ahead and dive right in. And Carl, you can go ahead. Dad, you can go ahead and share your screen and let's get this party started.
I'm having trouble with the Q&A window. It won't move. It's the part where you grab it is out off my screen, so I'm having
I love that.
difficulties with that, and I don't seem to be able to.
Well, nobody will be able to see the Q&A box when you share your screen, but you need to see your stuff, right?
That's true. Anyway, I'll don't forget to tell everybody that sometimes browsers do not handle. Some browsers don't handle the recordings that well. So if it's out of focus, switch to another browser.
Yep.
It's happened to me, and it was the first time it ever happened. I was just totally confused. So
yeah, it's definitely and make sure you've got that 1080p set. YouTube sometimes will default to the lower values. So all of that's important if you want to see our charts clearly.
Okie doke. Let's see. I'm going to start out with Apple this morning, and the other big techs that we track. David Bahnsen was saying that leaders in the decades, which of course the big techs have been in the prior decade. And he says they never, once they're a leader in one decade, they are never leaders in the next decade, and that's something to keep in mind. Now, this could change. This could be the exception to the rule. Excuse me, but that's something to keep in mind when you're looking at these stocks and thinking it's kind of like the Nifty 50 back in the day. Okay, Adobe is it's just really
falling off a cliff.
Right. Amazon is trending down again, and it's in a short to intermediate term, trending from the August top. Google's testing support, Meta, Facebook breaking down, Microsoft testing support, Netflix has recovered quite a bit from its double bottom here, actually the triple bottom. The big deal is they're going to start advertising, which everybody thinks is a great deal. As a Netflix subscriber, I don't think it's a great deal at all. So.
No. I'm hoping that they have like a free version and then that's where you get ads, but it seems silly to be paying for something and then you have to watch the ads.
Well, look at DirecTV.
That's true.
NVIDIA has broken down again, and Tesla trending up.
Yeah, the chart's not looking too bad on Tesla, I have to say.
Really, yeah. But it's a PE of 110.
Yeah.
To me, that's just nuts. Here, I wanted to show the 30-year mortgage chart. Just for the chart, you can see this is in 2020, right after
yes,
it hit an all-time low, and now we're back up to where it was in.
By what, the housing crash area?
Yeah, the 2007. Let's go back, get it up again. Now, here's here's what's going to be moving against the market. We've got, here we show a fixed payment mortgage amount. The idea being that people buy a house based on the monthly payment. They don't care what the house costs. They just care what the monthly payment is and whether they can afford it. So at the beginning of 2021, 2021, a payment of $2,015 at 2.65% would be for a mortgage amount of $500,000, $500,000. As of last week, the same payment at a rate of 6.02, it's $164,000 less than what it was back in 2021. That's how much less you can afford, the person can afford just to keep the payment at that level. And looking at it another way, here's for a fixed mortgage amount, which I picked $500,000 at 2015 and back at the low point, and as of last week, $3,004, almost 50% greater payment for the same mortgage amount. So this is great big headwinds on the mortgage market.
Yeah, it's one of the main expenditures of families and just about everybody. And between rents going up and it's not working out too well for buyers right now.
It's terrible.
It's not great for sellers either, to be honest.
Okay, for the market, started out down today, but not by a whole lot, and it's recovered somewhat. It's basically running flat, waiting for the announcement on Wednesday from the Fed. And there's a lot of talk that it's going to be a 100 basis point raise. That's kind of what everybody's counting on. So if they come through at only 0.75%, 75 basis points, that maybe the market will celebrate.
And it's not.
I don't know. I have no idea. But basically, right now, it's markets on a hold. So they're waiting to see what the Fed is going to do. And maybe they'll have a clue as to how. There it goes. I got that Q&A thing.
We can't see it, but yeah.
Yeah, I know. Okay. So, and look again at this chart. Notice on Friday the very high volume that we had. S&P total volume was about double normal, and that's what we get on end of quarter options expiration. So if anyone was thinking that was a something marking a bottom for the market, no, it maybe the market was going to bottom, but that has not. Only thing it has to do is options expiration. Over here in June, you can see another big spike like that. That's what happens.
Mm-hmm.
Okay. Now I wanted to look at the gold cross index for the broad market. The S&P 500, it's at 37, which means that 37% of the stocks in the S&P 500 have the 50 EMA above the 200 EMA. For the Nasdaq composite, it's only 21%. And New York Stock Exchange composite, 27%. So we can see it on a long-term basis here. We did make a bottom, but we don't know for sure if that is going to be the bottom. But it certainly gives, it's a reason to be encouraged as far as if you want to be optimistic. And here's the Silver Cross Index for the S&P 500 at 44%. That's this percentage of stocks with the 20 EMA above the 50 EMA. Again, you can see we had this low, which did not exceed the low in 2020 for that bear market. Rebounded and it got over. This is much more active, and it got overbought, and now we're headed back down. Notice that we have a top beneath the signal line on all these indexes. The Nasdaq composite is at 35%, and the NYSE composite is at 35%. So all those headed down. Okay, here we have the short-term STO, Swenlin Trading Oscillator for breadth and volume. There's a short term, and the IT breadth momentum and volume momentum indicators are intermediate term. So we have a top, and STOs are headed down at this short term. So the momentum is down, and the ITBM, if this is a bottom for that indicator, then we have positive divergence, which is very encouraging in the intermediate term, but let's not count on that just yet.
Yeah, just a reminder to people, when you're trying to set up those positive and negative divergences, you actually need that second price bottom. You actually need the actual bottom on that particular indicator before you can have kind of an official positive or negative divergence. But certainly we like to pay attention to what's happening now because we know price is lower than it was previously, but we're still waiting for that actual bottom on these indicators, and we don't have them yet, just to clarify.
Okay, let's look at the US dollar. It's been mostly flat, still not showing the kind of weakness that people in gold would like to see. Gold is dribbling downward, lost this support. Let's just look at a 1 year of this is, see now, the other was GLD, which is the ETF. This is a continuous contract gold, and it did break down below this support. We would certainly like to see it hold there above that line. So far, so good. Oil was down quite a bit this morning, but has rebounded. So it did find support at this level, which is encouraging if you're in that market. Again, it seems incomprehensible to me that it's still not going through the roof, but that's why you have a chart. What you think it's supposed to be doing, this tells you that your thinking is right or wrong. T-bonds, trying to do a double bottom here, but I honestly don't think that's, I don't think that we can expect any kind of major rally in bonds.
Not so long as those yields are flying high, that's for sure.
On, let's see, last week, Bitcoin took a major decline here, and this was, let's see, this is Monday, this is Saturday, Friday, I'm sorry, Sunday and Saturday, so here's Friday. So early in the last week, it took a dive, and look at, it's on a support right now. This could be a range that it stays in for months, even years, but probably not with Bitcoin.
A little too volatile.
Right. The 10-year Treasury, which apparently has a great deal of effect on the big tech stocks, and it's basically got a double top right here. I think that we're going to see, a result. Will this resistance hold and it go back down some? We'll know more about that on Wednesday when Fed makes its announcement. In the way of sectors, we have one sector that is sitting on the verge of a sell signal in the immediate term, with the 20 is now below the 50. So if the price holds, that's what we're going to have a result. We'll have a new sell signal in the sectors. Just looking, generally speaking, how we're standing right now. So one more sell signal coming up. The energy and utilities is the most stable, and we have both of them on intermediate and long-term sell signals. And let me see, do we have
questions? I've been looking, it looks like right now. Somebody did ask and I typed it in, but where do we get the information for the mortgage rate chart?
Oh, yeah, that's it's on the chart.
Yeah, it actually is on the chart. So if you go back, but I typed it in, it's Fred, let's see, HTTPS St. Louis Fed. So STLOUIS Fed FED.org. That's where we get those the information. And then just so you know, as subscribers, you do have access to that chart and all of the charts that we've been seeing with the annotations. So if the charts are something you like and you want to see what Carl's thinking about a chart, because he does pretty much all the annotations, you'll be able to do that with a subscription to DP.
There actually is a Freddie Mac, the Freddie Mac website. It comes out with here you go. There's the URL, and it's actually comes out. It posts earlier on Thursday, earlier than the Fed website.
All righty.
Hey.
Let's move along. I will share my screen now. And before I get started on the sector/industry group charts, I was given this slide that I need to show you about ChartCon. That is coming up October 7th through 8th. It's completely virtual. They are flying myself out. They are flying tons of other of my colleagues out for ChartCon to Seattle. And we're going to be doing a very interactive conference. Usually ChartCon has been kind of this list of presentations by everybody who goes. In this case, I'll be heading up a trading room. There are going to be bull and bear forums and discussions, fireside chats. And then the keynote speakers are Linda Ratschke and Larry Williams. So certainly something you wouldn't want to miss. If you are a member of StockCharts, it's only $99. If you're not a member, you can get a free trial and still be able to take advantage of that cheaper amount for ChartCon. So highly recommend you go check it out. I can't wait. I can't wait because I get to meet some of the people I work with virtually, but also see so many of those that I've made friends with over all these years in the business. So highly recommend you go check that out. All right. So here is that mortgage rate chart. There is the source that we're getting it from. All right, so I am going to look, let's get an overall view of what's going on with the sectors before we get into the industry groups. So I'm going through this in a way that free subscribers to StockCharts can get into some of this data, but there are going to be a few items that are set up for me as far as my chart styles that you do need to be a member in order to set up or use my chart styles, whatever it is you'd like to do. But this is where you can get to this information. So I'm going to look at the sector candle glance, and this puts pretty much all of those sectors and the S&P all on one page. The way I have it set up with my PMO and price with the 20, 50, and 200-day EMAs, that is something you won't have when you first do your candle glance, but if you are a member and you would like this chart style, you can either create your own and save it as candle glance, or you can send me an email if you are a StockCharts member, and I'll send you a copy of my chart style that you can use for candle glance. All right. So I've been watching this candle glance. I watch it all the time, every day. And the one thing that Carl pointed out that I have to reiterate are all of these PMO tops beneath the signal line. In some cases, we didn't actually get the bottoms, but we got an acceleration to the downside on pretty much every single one of these sectors. With the, I guess, is there an exception here? Not really. We had energy, which was above its signal line, so I don't know that we actually got the top beneath the signal line. But my point is that when you get a top beneath the signal line on the PMO and really on most indicators, that's an especially bearish signal. It's not just bearish because it's moving down. It's especially bearish because it has a failed rally. That's why you end up seeing those tops. So right now, everything looks pretty ugly. I mean, there's no getting around it. So we have to find some strength. Where do we actually have some momentum? We don't have a whole lot of momentum, but where might we see some price support? And, that sort of thing. Discretionary has made its way down. It's managing right now to rebound before hitting that low back here. Comm services are just a disaster right now. The XLK, the technology sector, is mostly a disaster, except that it has been able to hold this level of support so far. But we're on a pretty steep decline. I don't know that we're going to see this level over here hold for technology. When you look at the negative RSI, you look at stochastics turning down, relative strength. I mean, this is the sector that's supposed to lead the market. And if you're seeing it underperform what's going on in the market, it means that the market's going to be really experiencing some tough times. I'm going to put this on our sector chart so that we can see the participation below and under the surface. So Dad talked a lot about the golden and silver cross. We have that for each of the sectors, as well as gold miners. It's the one industry group that we do have this information for. And we check how many have a 20 above their 50, and we check the golden cross. Everybody's fairly familiar where there's a 50 above the 200. So we take the aggregate of all of that, and that becomes what our silver and golden crosses are. You can see that right now in technology, I mean, the participation is just, there's barely a heartbeat here. We only have 9% above their 20. And when you come down to see how many are above their 200, only 21%. So that tells you that pretty much everything, at least 20% are not in corrective mode, possibly. Just because they're above their 200 right now doesn't mean a whole lot. But ultimately, technology is really showing a lot of weakness. Now, I did write an article on healthcare this last week for chart watchers, and it's also in our DecisionPoint blog. If you go to our website, I, of course, got to show you our website as much as I possibly can. So if you go to our website and you go to the blogs and links page, even if you are a free member, you can access the free material where you see those little green free symbols there. The rest are going to be the obviously members only information. We do two reports, the DP Alert and DecisionPoint Diamonds. And the DecisionPoint Alert is pretty much our overall report, covers the market overall. And then we have Diamonds, which picks out stocks and ETFs that we would see hopefully rise or fall with the market trends, or find those that are, really working against the trend. And that's kind of what we want to find right now, since the market is doing so poorly. And I did want to mention, we've just recently added to DecisionPoint Diamonds. I do 3 picks on Tuesday, and I do 3 ETFs on Wednesday. I've started an ETF day because I know not everybody likes to invest simply in stocks. They prefer to go with the ETFs. So if you are an ETF follower, DecisionPoint Diamonds will also work for you. And then Thursday, I take reader requests, and of those reader requests, I'll find the ones that I think are diamond material, or I'll pick some out that just are some great lessons learned. All right. That's it for my 30-second commercial. All right. So healthcare is one of the areas that I've been watching as a sector to watch this week. Obviously, right now we're watching it gap down and move lower, but it was one of the few that actually was looking at a short-term rising trend that it was holding no longer. We now are seeing that top, a second top, it looks like possibly. I think it was continuing lower, but it was trying to improve, and now we have another top beneath the signal line. But you can see in comparison to the technology sector, we have at least a heartbeat, faint as it is, because we do have almost 30% of the stocks within the healthcare sector above their 20-day EMAs, 26% above their 50. Now, this is not, huge. This is not great numbers, but when you compare it to some of the others, and in particular, healthcare has been outperforming the market. This is another great example of, looking at benchmark relative strength. When you're comparing to something that's going down like the S&P, just because you're outperforming, and in this case, it was outperforming from this top to where we are now, not a great place to be invested. So we have to be really careful about the relative strength lines. And some of the time, what we'll do, especially on an RRG, is just make a comparison between it and $1, which just gives you your actual performance of that particular sector. But right now, not looking so good in healthcare. I still like that it's holding above this area of support, but I'm definitely disappointed that it's not performing as well as I would have hoped today. Energy was one that we looked at that still got the 20 and 50-day above the 200-day EMA. And you can see a lot different under the surface as far as the SCI and GCI go. You've got over 90% with a 50 above the 200. So there is still some foundational strength here in energy, but unfortunately we've formed this very ugly double top. And as of today, we are confirming that pattern with the drop below the confirmation line right through there. Looks like we're currently trading above it, but this is certainly not a good sign. And then the other we talked about was utilities. And you can see again that double top is prevalent on the utilities chart as well. And we are also seeing that confirmation of that double top with that break below the confirmation line. We don't have the close yet, so we don't know if it's going to close below that, but just the fact intraday, we ended up seeing that. Also notice that it closed beneath the 50-day EMA on Friday with that nice long wick on that candle, which did suggest we were going to see lower prices again. And sure enough, we certainly are. You can see under the surface looking better than XLK in technology, but you can see the breakdown here in the short term as more and more stocks lose support at the 20-day EMA and the 50-day EMA. But you can see that with a GC, or with more than 93% with price above their 200-day EMA, these stocks are not necessarily in corrective mode. They're hanging in there. But you can see relative strength starting to kind of peak a little bit here on the utility sector. Stochastics still moving lower. I mean, ultimately, guys, it's pretty ugly out there. We didn't talk about gold miners, so I'm going to go ahead and we'll look at the GDX chart. And full disclosure, I do own it. That is not to say you should go buy it by any stretch of the imagination. But I really like the way it's trying to bottom here off of this short-term support. Don't be fooled that this is very strong support, because this is really matched up just with that short-term line. And I'll just quickly move us into a weekly chart so you can see some of the support levels here. So that was major support that was lost on gold miners. Next level was right in here, and that was lost. So we are sitting right about here, which is right on this support level at this set of tops, kind of back here as well. So this is going to be a really important area of support for gold miners to hold, because the next one down is going to be right in this level, right around $19, $20. That's going to be a vulnerable downside of 18%. So I know I'm watching this support level very closely. I have a very tight stop under that level. So again, that's me. Don't feel like you should be going into gold miners because I own them. I always have to say that I have to let Diamond subscribers know what I have. And then for both Diamonds and DecisionPoint Alert subscribers, I will tell you what my exposure level is to the market, just so you can have a gauge. Again, I'm not the best benchmark to use, but it's just more data for you to consider, I suppose. But I'm looking for this as being a double bottom. I'm looking for gold to start improving its position. Right now, we're not seeing it. And gold miners, unfortunately, while they can go with the direction of gold, and if gold's going to rebound, that's great. But they're also really affected by the winds of the market in general, just because they're companies versus, the physical gold itself. So there are two components there that GDX is vulnerable to. And when they both are doing well, obviously gold miners are a great place to be. But when one or the other isn't doing well, you really have to go through and make those decisions. I was very pleased to see the participation really popping here on stocks above their 20. And since then, the air was let out of that balloon. Stochastics topping where they shouldn't, but the PMO is still holding up. And that's one of the reasons I've been able to stay in it. But I've got my finger over the button, if you will. All right. And I think that was the major stuff I was going to go through. I'm going to look quickly at the industry groups, and not all of them, I promise. But we'll look at just a few of the industry groups within some of those stronger sectors, which would be energy, of course, and utilities. So energy, has really just been moving around sideways. And this is the oil equipment and services. This has actually been the one bright spot as far as the chart goes, the industry groups go, because we were seeing rising momentum. Well, that's not the case anymore. And it's in the process of giving us a PMO sell signal. I mean, this is just another example of why, we're in a bear market. Things will start to look good, and then any little whisper is going to turn them down. I know Dad will agree with that. Integrated oil and gas, double top, exploration production, double top. They're still holding support here, but they better rebound, because if they drop below that, then we're looking at a possible move that is the length, the height of this pattern. So if you get the breakdown, the expected downside here would bring us down to this level here at about 850, it looks like, for the exploration and production industry group. Pipelines also losing some support. They lost support at this, if you were going to call it a confirmation line. This doesn't look that double topish to me, but in any case, losing the 200-day EMA, losing this level of support. Looks like we're rebounding right now, which is helpful. And coal, which hasn't been doing very well, does look like it's in the process of bouncing, but we really don't have a confirmed bottom on this one yet, because intraday we did get a lower low than on Friday. And then we'll look quickly here in the utilities sector, which is, of course, all the way at the bottom. Gas distribution dropped below that 200. We are rebounding, and it does look like it is trading currently. Well, these are not tradable, but it does look like the close currently would be above the 200-day EMA, which is good, but it's still looking very weak. Stochastics still moving lower. Multi-utilities double top, but hasn't quite executed or confirmed that double top with a drop below the confirmation line. But still, you can see all of these indicators just really not looking good. And if you have the time, I would recommend just flipping through all of these groups and seeing where the strength may or may not lie. And I say may or may not because there isn't a lot of strength to be had out there in just about all of the industry groups. They're all looking pretty ugly. So a move to cash, staying in cash for the faint of heart might be a good idea. I know that's why most of mine is in cash. But you can see that double top on conventional electricity, but in this case, holding that support line currently. Water is the other one. It's lost support. It is continuing lower, but it is holding this support level at those July lows. So it isn't over till it's over, but certainly while we have a few things that we can be encouraged about, there aren't a lot of things that we can be encouraged about. All right, so I think we're going to go ahead and move into the symbol request portion of today's trading room. I think a lot of you will find it interesting, even if you're not a stock trader. Just looking at symbols is always interesting.
Let me take it back momentarily. There was
yes, absolutely.
I wanted to cover, and I didn't. I listened to the morning show on the local radio station when I'm getting up, and one of the hosts was saying, I'm trying to find there we go, chart tool, was saying that he was talking to the CEO of a major package delivery service, and they said their business was down 20%. Now,
wow,
that blew me away because I'm not glued to the business channel, but I hadn't heard anything like that before. But then what did we have last week? Federal Express. That's where, look at that. So, and they had some negative guidance, to say the least.
I had not seen that chart. Oh my goodness.
Yeah, crazy, huh? Crazy.
Wow.
So, mostly the TV business channels, they have people who are optimistic on all the time. They don't want to give you bad news. And of course, so we missed a lot of the bad news that we should be hearing.
Yes.
Now, I'm going to move into the symbol and a request, and I'll pass it back to you.
Okay.
We have one. The first one is way complicated. It goes into an analysis approach that I'm not familiar with, that I don't use. But there was one part of it that says, is the gold rally over? Well, he is obviously not talking about the daily chart. Obviously, there is no rally going on here. But I did think that we probably can look at the monthly chart, and there's the gold rally he was probably talking about. So right now we've got a double top, and basically there's the confirmation line. And if it drops below that, then I would definitely say the gold rally is over. Okay.
Yeah.
You may
grab that screen away from you, wrestle it away.
and I'll give you the first symbol is O, I think it is.
Oh,
reality income. I'm not familiar.
Realty income, retail REIT. Boy, that is an ugly looking chart.
If you start making some version of megaphone pattern, there are no two lower low in between three higher highs for classic megaphone. Did it make a double top at 75? I'd say so. Yeah.
Yeah, absolutely. I mean, if we go to the weekly chart, it becomes even more obvious where we're at. This one tends to make the rebound at this level. So all is not over, but I mean, we looked at that mortgage rate chart. We know that there's going to be more pressure in real estate area of the market. I mean, not all these companies are involved in that way, but this is kind of the make or break level here at about $61.80, $62. I mean, if it can't hold that level, this could be really ugly for realty income. And I would just be very careful. And when I see a decline, like, we saw back here, we got that rebound, but notice it didn't even come close to moving back up to test overhead resistance. And that was a great sign that we probably weren't going to see a continuation of this particular rally. Sure enough, we got the move back down, formed, I would say, kind of a flag with kind of a diamond shaped flag. That would be a bullish pattern. We did get that breakout, but seeing this big decline, I mean, certainly there is opportunity. But again, I'm going to do all of these stock symbols. And again, we talked buy points, sell points. This is really going to be the buy point down here at about $62. But personally, I would not be expanding my portfolio whatsoever. But we do have to, not everybody has the luxury of not being in the market. So it's always good to talk about these symbols. So the other thing I'm going to do for you is I'm going to do a 5-minute candlestick chart. This is a trading room after all. So what we do is look at the dailies. Carl and I can give you our opinion of those, but then you need to go over to a 5-minute candlestick if you want to time those entries and exits. I'm not going to do this for every symbol request or we'd be here forever. But what the buy points are on a 5-minute candle is when the PMO has a positive crossover or is above its signal line and you have a positive RSI. Two very simple things. When you see that, which happened right about here, that is your entry point. That's your buy point. Sell points are determined when the PMO starts to turn back over. And you can see it started to turn back over here. So as far as a day trade goes, I mean, this particular system, you're looking at 1.16% that you managed to gain, and then you didn't have to go through that big giant loss on the other side. I'm not a day trader. I know a lot of people are starting to make some money on intraday trading. Just be very careful. Things can turn on a dime, as you can see over here with that opening drop down.
Okay.
So not liking it.
ABBV.
ABV. This has been a prior diamond. Very interesting setup here. And feel free to barge in, Dad, if you ever, when you see stuff that you want to talk about on these.
Okay.
Looks very much like a reverse head and shoulders. One of my dad's favorite patterns. Not. So I follow all chart patterns. I'm absolutely addicted to them. I like to flip through Bukowski's encyclopedia of chart patterns is about this thick. So I dig them. And this looks like a reverse head and shoulders, if nothing else, a basing pattern. And it looks like we're ready for the breakout. But you can see Friday, it started to break out, was failed and came back down. And now today we have a very ugly filled red candlestick. The indicators haven't moved south yet. So if I owned it, I certainly would be holding it. I wouldn't want to buy, though, unless I got a confirmed breakout here. We're so close to that breakout point now. I want to see a close above that breakout point. We've done the job, gotten above the 50, but still looking a little weak. But, relative strength, this is the other place I like to follow. Industry group to the SPY, stock compared to the SPY, and then the stock compared to the industry group. This is the piece that's helpful if you're trying to make a decision between two stocks in the same industry group. Look for those that are outperforming the group. That gives you a much better possibility of doing well. So all of these things are in place. This is the kind of chart that I do like and look for. But for me, as far as investing in it, I would want to see the breakout. If I was holding it, I would certainly hold it. But if it got below this 200-day EMA, I'd probably give it up.
Okay. David wants CCRN. It says the PMO is looking good.
All right. What do you think? Developer of the PMO.
Right. The PMO is positive. I mean, it's above the signal line and rising. I don't see as tight a bottom on it back there in August as I like to see, but obviously it's performing as you would expect after a PMO bottom.
Yeah, it's looking pretty good. I have to agree. But the fact that it got to this resistance level and is turning back down despite a PMO rising, still looking a little iffy. But I have to say, I mean, all of the indicators are doing exactly what I want when I'm looking for a chart. RSI positive, PMO rising, not overbought. You've got stochastics that have just gotten above 80. With stochastics, I don't think of it as so much as overbought, oversold. I look at positive versus negative. And if you get the stochastics and they stay above 80, which they are apt to do, particularly in the middle of a rally or at the beginning of a rally, like you can see here, got above 80, stayed above, and then boom, you still were seeing things moving as long as stochastics were above 80. So they're back above 80. We saw that they teased everyone. They got above 80 and then immediately switched back down. But this is very encouraging. Certainly, I would worry about the fact that this particular industry group is not performing that well. It's in line with the S&P, which normally wouldn't be a problem. In fact, would be a good thing. But right now, you don't want anything that's traveling in the direction of the SPY, which is lower. But you can see that this one does tend to outperform the market on its own. And certainly, it's been outperforming its industry group. So I would make an exception for it. But overall, I would just be very careful. Again, opening up your exposure.
Okay. Michael wants to see Barrick Gold. We've already covered the gold miners, but let's just look at GOLD quickly.
Yeah, this is one that is one of my favorite ones when I'm feeling it for gold miners. I went ETF this time rather than stock, but mainly because a lot of these stocks are just kind of, meandering sideways, which is what gold GOLD is doing. Nice bottom above the signal line on the PMO. RSI is negative, and certainly stochastics don't look great. And again, what we want to find are those outperformers, and which gold miners are outperforming the group. This one is not. This one is underperforming its group. So it's kind of outperforming the SPY, but not really. So I would be looking for a different vehicle in gold miners than this one, just simply because it's underperforming the group itself. There should be something better out there. But beware, this flat bottoms, declining tops, that's a descending triangle, which is bearish and implies a breakdown here.
Okay, PNT.
All right, Point Biopharma. And again, healthcare is one I've been paying close attention to, particularly going into this week. PMO is very undecisive and very, what would you call it, twitchy. The RSI isn't positive yet. This is a really volatile, I'm guessing biotech probably, biopharma. So be really careful. And it looks like it is fairly low in its average volume. It's under 100,000, 50-day moving average of volume. That's a bit low for me. I don't usually go in that direction. But certainly rising trend. I think it's so middle of the road. I just don't see a big pop here. And certainly the PMO is not in agreement with this one. If I owned it, I'd hold it, but set my stop really tight, probably at the 200-day EMA. But although, is that tight on this one or not? It's about a 7% stop.
Okay, let's try $PANW.
Oh, PANW. I'm sure this is the one they want.
Okay.
If you're on Twitter, just FYI, Dad, I know you don't do that, but when you're talking stock symbols on social media, they always have you put a $sign in front of it.
Oh, okay.
So I think some people are kind of stuck on that. Okay, there are a couple of things here. And Dad, I'm going to take a sip of coffee if you wanted to talk about it, but the split is the first thing I'm noticing.
Yeah, yeah. Yeah, I don't
Typically,
know.
when you get those, do you see a whole lot of stocks after a split have a raging rally?
No, but I'm not sure statistically how that's holding up. Back 20 years ago, we used to get a lot more splits than we do today. And usually after a split, you'd get a decline. But
Looks like we're getting that decline. The length of which, hard to say. I'm just going to throw up Tesla really quickly because we're talking about splits, and they had a recent one. So you can see they had the split and then did have a declining trend. Did recover, certainly, but still just something to keep in mind. And this is a pretty big double top here. Back here, we didn't see the gap filled. So that was very encouraging. That's a really bullish sign. The gap wasn't filled and it rebounded off that gap support. I'm talking about this gap. This time we are filling the gap. Typically you fill a gap, you're going to see a continuation to whatever side it's moving. So you're filling a downside, an upside gap. You're going to have to expect prices more than likely dropping beneath this 200-day EMA. And then on top of that, it's a double top. PMO is also in decline. Stochastics in decline and negative. I mean, I love this stock. If I'm going technology, this is a stock that I do like to pay attention to. They're into the cybersecurity side of software as well as the equipment. I would be, this is where I would want to be, but you saw that XLK chart that we looked at earlier, and not a really good look. If you have it and you were interested in selling it before it drops beneath that 200-day EMA, no sell point right now, certainly at a buy point with that crossover. If you're seeing this and you want to take the chance on a bounce off a 200-day EMA, certainly a buy point. But I would be looking for those turnovers on the PMO to give you a pretty good high sign to exit.
okay. Let's see. FRME.
And then I see somebody asking if pipelines have a head and shoulders. So I'll take a quick peek at that too. We have about 5 minutes. We try to get through as many symbol requests as possible, but if you're really into the symbol requests, be a Diamonds member, because Friday I have a subscriber only Diamond room and everybody's symbol request is going to get looked at. All right, really nice bottoming formation. I like the big move today, almost 2%. PMO doing what it should. RSI is positive. I love stochastics getting above 80. Not only is the group outperforming, but FRME is very much outperforming both the S&P and its group. I like this stock. If I were in the process of looking to expand my portfolio, certainly a candidate. Let's see, since it is what I would consider somewhat of a candidate here. And again, I'm not expanding my portfolio, and I would definitely tell you to be careful if you are, but this one does look pretty good. I do notice though, super low volume here today, and typically it's only about 160,000. So again, be careful with those low volume stocks. That's why we have sort of this fits and starts here on the 5 minute. So I'm going to move to a 15 minutes so it's smoother, but you can see that we're actually right at a sell point. Certainly could see this turn into a flag and then a big breakout. But, if I were an owner of this, I would be watching. And if it just turns down even a little bit more, that would be my sell point. Buy point already came in earlier, right, at about $40.75. So we're much higher than that. So I don't know that you're going to find the good buy point today. There you have it.
Okay.
And the last one was pipelines. I'm going to use UMI. That's the ETF that we use in our ETF tracker. And you were seeing head and shoulders on pipelines. Well, as far as I can see what you're probably going for here, there's your head, left shoulder, right shoulder. I think you could look at it that way. Honestly, my first thought was a double top. we're losing support. We lost support here, managing to rebound, but really getting held up here at that 50-day EMA again, top beneath the signal line. Energy, I think, is one of the few bright spots, but, the big problem is USO, which is just, all over the place here, volatile, not really making its mind up on direction. And that's just certainly putting pressure on all but coal in the energy sector. All right.
2 minutes.
2 more minutes. I think we can probably fit in 1 or 2 more.
GNRC.
I know this is Generac. I know this is the one that you're familiar with.
Right, my emergency generator.
Yes. Helps except when the air conditioner breaks.
Right.
All right. We have a loss of long-term, major support, certainly intermediate term support here with a wick. We are seeing a hollow red candle right now, which is positive, but certainly nothing on this chart suggests to me that it's going to be moving higher. I mean, it looks more like a breakdown in the making. DP weekly here. This level of support is about as strong as you can get. And if it loses this, which it's in the process of doing this week, PMO, weekly PMO on a sell signal now, I'm not a fan of this one at all.
Yeah, that's terrible looking.
Couldn't be much worse, honestly. HTZ, I'm going to look at really quickly. Hertz Global, sell or hold. If I owned the stock, I know, let me get that thumbnail because I can't see exactly. Yeah, bottom beneath the signal line. If I owned it, I think I would hold it, but only if it can hold this level of support. So you're actually, and let me see if that's reasonable. That's reasonable. That'd be about a 4.5% risk on the downside if it did hit that stop. But everything here is saying it's going to break down.
With transports being in such trouble right now, the transportation's, like I talked about, the package delivery. I'd say everything's in trouble when you have that kind of an issue.
Of course not. Yeah. So ultimately everything's looking pretty poor, but if I owned it, I think I might be willing to hold it to set a stop right down here. But then again, everything looks pretty negative. You're probably going to have that stop hit. So you just have to decide, are you up for another 4.5% decline here?
Okay. Right. We almost did it.
Yep. PMO settings real quick on 5-minute charts. You could certainly, the PMO, you could set any kind of boundaries. I use the defaults. That's how we created these, is with those defaults, but you can certainly speed them up. I think they worked fine in any, whatever you want to use, but typically I just keep the same ones. A 5-minute PMO is a 5-period PMO. So it's already being sped up for the actual chart. And that will do it. I'm going to unshare my screen. Thank you guys for joining us today in the DP Trading Room. It's been our pleasure to get you ready for the week, let you know what's happening. If you'd like to join us live and are watching the recording, if you go to the homepage of our website, you'll see an ad for the DP Trading Room. Click on it, register. You'll get notification. You don't have to come every week, but you'll be notified and reminded that we are going live. All right, with that, I'm going to say good luck and good trading and turn off this recording, and we will see you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.